Welcome to Griffonomics.
Glad to be diving into this one today because it's a wild ride.
It really is. I mean, imagine landing an $80 million multi-year government contract.
Right.
We are talking about the kind of massive statewide win that, should have Wall Street absolutely throwing a parade. But then imagine turning around the very next day and issuing a formal warning to your investors that you might not actually have enough cash to keep the lights on for the next 12 months.
Yeah, it's a staggering contradiction.
It's the exact paradox we are unpacking today. And for you listening, you've provided us with a massive stack of sources for this deep dive. We've got earnings call transcripts, full year 2025 financial reports, press releases from late 2025, early 2026, plus a bunch of analyst notes.
There's a lot of paper.
It is. And the mission here is to generate a really granular strategic report, basically an actionable investment roadmap, to figure out exactly what is going on with Rekor Systems.
Yeah, and going through this stack, it points to a company sitting at honestly, one of the most volatile inflection points a business can experience.
Right.
Because we aren't just looking at a bad quarter or a new product launch.
Yeah.
We're looking at a fundamental transformation. They are desperately trying to pull off this transition from being a very heavy research and development startup into a fully productized, digitally enabled, well, what they call an operating system for the roadway.
Yeah, the Roadway OS.
Exactly. And looking at this data from the end of 2025 and early 2026, the stakes for bridging this gap,
Yeah.
they just couldn't be higher.
The narrative is fascinating because to understand how they got into this weird situation, the cash crunch versus the massive contracts, we have to first look at what they're actually selling to build this Roadway OS.
Right. If you strip away all the marketing jargon, what Rekor is actually attempting to do is force government agencies to completely rethink how they manage physical infrastructure.
It's a big ask.
It is. And they've built three primary software pillars to do it. First, you have Rekor Command, which is their transportation and incident management side.
Okay.
Think of this as the digital nerve center for a state department of transportation.
Yeah.
It helps them clear congestion, route emergency responses, that sort of thing, all in real time.
Okay.
Then the second pillar is Rekor Discover, and that's their urban mobility platform. This is really for the urban planners. It's counting vehicles, analyzing traffic patterns, even calculating greenhouse gas emissions based on actual vehicle throughput.
Okay, let's unpack this because there is a third pillar too, REKR Scout, and that one handles public safety.
Right.
That's the automated license plate recognition platform. So law enforcement uses it to instantly cross-reference plates against like national crime databases or stolen vehicle lists.
Yeah.
But when you look at the 2025 report card for all of this, the entire business generated $48.5 million in total revenue.
Yeah, solid top line.
But the critical part, the thing you really have to pay attention to, is the revenue mix, because it's now sitting at a 50-50 split. They have $23.9 million coming from recurring revenue, and then the remaining half is product and service revenue, which is basically one-off hardware sales.
And within that mix, it's really interesting to see where the market demand actually is. It's heavily skewed toward the data and planning side. Urban mobility, that Rekor Discover platform, is the absolute heavyweight here. It pulled in $29.3 million.
Wow.
Yeah, and public safety is sitting in second place at $17.4 million.
Which is still significant. But to understand why this 50-50 split is such a big deal for you as an investor, you have to think about the magic of software economics.
Oh, absolutely.
Historically, a company would sell a piece of hardware to a state agency, right? Say a traffic camera. They get paid exactly once. To make more money, they physically have to go build and sell another camera. The margins are terrible.
Brutal, yeah.
So think of Rekor's model kind of like the smartphone industry. They are selling the physical hardware, the cameras, the sensors, but the real long-term value, the real margin, comes from the recurring software subscriptions, the apps, basically.
That's a great way to look at it.
Once Rekor writes the code for that software, selling it to the second state or the 10th or the 50th state, it costs them almost nothing. The margins just absolutely explode.
And if we connect this to the bigger picture, you can see why pushing government agencies toward a data-as-a-service model, DaaS, is really the holy grail for predictable revenue.
Oh, for sure.
Because in the legacy model, a Department of Transportation goes out and buys expensive sensors, they pay contractors to install them on the highway, and then the state bears the entire financial burden of maintaining them. A storm rolls through, a wire shorts out, the state pays for it. It's a massive, unpredictable capital expense.
A total headache for a local government.
Exactly.
Yeah.
But Rekor's proposition flips that entirely. They
Yeah.
go to the state and say, hey, let us handle the physical infrastructure. We will deploy the sensors. You simply pay a predictable, recurring subscription fee for the high-quality data that comes out of them.
It's brilliant. But, turning a whole organization into a software-first machine like that requires a really painful strategic pivot. You don't just stumble into a 50% recurring software model by accident.
No, you definitely don't.
According to those late 2025 earnings calls in our sources, management had to make some very deliberate and honestly very expensive operational choices.
They did. Interim CEO Robert Berman was remarkably blunt about this on the calls. He stated that 2025 was the year they explicitly shifted away from being a, quote, development-heavy, R&D-driven organization.
Right.
Because building theoretical technology in a lab, that's great for a startup. But at a certain point, you have to execute a pragmatic, customer-focused business model.
And part of that pragmatic execution involved ripping off a pretty massive Band-Aid in the fourth quarter of 2025.
The Israel facility.
Yes. Rekor made the decision to completely shutter its engineering operations in Tel Aviv, Israel, and onshore all of that development back to the United States.
Which was a massive move. And that decision triggered a $3.8 million non-cash asset impairment charge on their 2025 books.
Let's translate that for the listener really quick, because a non-cash asset impairment charge sounds terrifying.
It does.
But it really just means they had to write down the accounting value of the assets they left behind or dismantled in Israel. It is an accounting hit to the balance sheet. It's not, $3.8 million in actual cash flying out the window.
Exactly. And the trade-off for taking that accounting hit today is an expected annualized savings of $7.5 million in operating expenses moving forward.
Which is great, but I have to put my skeptical investor hat on here for a second.
Go for it.
You are shutting down an entire international engineering hub, a hub that was responsible for building out your core products. Doesn't moving your entire engineering team halfway across the world risk completely stalling your product roadmap? Doesn't it risk deeply frustrating the current customers who are relying on those updates?
It's a fair pushback. On the surface, it absolutely looks like a major disruption. But the underlying strategy here is actually about protecting their biggest customer base.
How so?
Well, first, onshoring brings the developers physically into the same building, or at least the same time zone, as the U.S. commercial teams and the customer success teams. It dramatically tightens that feedback loop. But the real catalyst, the real reason they did this, is external.
The geopolitics.
Right. Geopolitical risks in the Middle East heightened significantly throughout 2025.
Which obviously makes government clients incredibly nervous.
Exactly the issue. Think about it. Rekor's core clients are United States federal, state, and local agencies. Those entities have draconian data governance and security demands.
Oh, yeah. They don't play around with that.
They really don't. They simply will not procure critical infrastructure software if there is even a perceived risk that the development environment is sitting in a geopolitically unstable region.
That makes total sense.
So by bringing all that development stateside, Rekor basically permanently neutralizes that objection during the procurement process.
Okay, so the strategic pivot was aggressive, it was painful, but let's look at whether it actually paid off in the 2025 financial results. Top-line revenue hit that $48.5 million mark, which, is steady growth. But the underlying metrics are where the story really lives.
The defining milestone of 2025 was Q4. Rekor reported its first ever quarter of operating cash flow positivity.
Huge.
It's massive. They finally crossed that threshold where the day-to-day operations actually brought in more cash than they burned.
And we also saw adjusted gross margins expand to 55.9%. That's up from 49.3% in 2024.
What's fascinating here is that the margin expansion isn't some accounting trick. It is the direct mathematical result of the business model shift we were literally just talking about.
The software pivot.
Exactly. When you stop relying on low-margin hardware sales and you start recognizing more high-margin software and data subscriptions, the overall gross margin of the entire company just naturally lifts.
Yeah, pulls the whole average up. But I gotta say, the metric that absolutely jumps off the page in this report is the backlog.
Oh, the RPO.
Yes, their remaining performance obligations. This is the legally contracted future revenue that hasn't been recognized yet. It's surged an astonishing 80% to $25.9 million by the end of 2025.
That 80% jump is, without a doubt, the most critical number in this entire stack of sources.
Why is that the one?
Because when you sign these multi-year subscription agreements, that revenue trickles into the backlog. And it provides incredible multi-year visibility for investors looking into 2026 and beyond. It proves the model is working.
Right, but to build a $25.9 million backlog, you have to offer technology that makes the legacy systems look completely obsolete.
Right.
Which brings us to their innovation, specifically Edge AI and this privacy framework they have.
This is their hardware as a sensor strategy. Rekor designs these purpose-built AI hardware systems, the Edge Max, the Edge Pro, the Edge Flex. And the differentiating factor here is where the actual computing takes place.
Because with a legacy system, right, a camera on a highway records high-resolution video, and then it has to stream all of that massive video data up to a central cloud server just to figure out what it's looking at.
Exactly.
You are paying for continuous, heavy cellular bandwidth, and you are paying for massive cloud computing power to crunch the video. It's wildly inefficient.
It's incredibly expensive. But Rekor's hardware bypasses that entirely. It processes the high-resolution video directly at the roadside edge, literally in the box on the pole. Yeah, the AI instantly analyzes the video right there, converts it into a tiny text tree, like just a vehicle class or license plate number, and then it only transmits that microscopic text file up to the cloud.
Just the text.
Just the text. The bandwidth and cloud compute savings are astronomical for a state deploying thousands of these things.
And doing the processing on the edge directly like that is what actually enables their landmark privacy patent.
Right.
Because when you talk about automated license plate recognition, there is significant public and political resistance regarding mass surveillance. And just to be clear, we aren't taking a side on the civil liberties debate itself here.
No, of course not.
But from an investment and an operational standpoint, this resistance is a massive hurdle. Procurement officers get terrified of public backlash.
Oh, absolutely. Because legacy networks operate like time-based dragnets. They sweep up and store the plate data of every single vehicle that passes by for months or even years, regardless of whether a crime has actually been committed.
Right. So think of Rekor's patented incident-based system, kind of like a bouncer at a nightclub. But a bouncer who only remembers your face if you actually start a fight.
I like that.
Yeah. If you work in, you have a drink, you behave, he instantly forgets you were ever there. A legacy system, on the other hand, is like a bouncer keeping a permanent high-definition scrapbook of every single person who walks past the club, just in case one of them decides to jaywalk 3 years from now.
It's a perfect analogy. By processing at the edge, Rekor's framework dynamically encodes and anonymizes the vehicle data the exact millisecond it is collected. It only retains the data if it matches the severity of a suspected crime, like an active warrant or an Amber Alert.
And if it doesn't?
If it's just a normal commuter, the data isn't retained. Furthermore, management is explicit in these calls that they do not build centralized data lakes, and they absolutely do not sell data to third parties.
So what does this all mean for you listening? That privacy moat isn't just a nice PR talking point. It's the literal key unlocking state budgets. When Rekor walks into a room to bid for a massive contract, they can look at the politicians and say, we have patented privacy protection built directly into the architecture. Our competitors do not. It makes them the safest political choice.
Which is the perfect segue into their actual commercial execution.
Yeah.
We can see exactly how this technological advantage is translating into real boots-on-the-ground deployments with departments of transportation.
Yeah, these are not just little pilot programs anymore.
No, they are full statewide adoptions.
Here's where it gets really interesting. Look at the Georgia DOT contract. This is an 8-year agreement with a minimum value of $50 million, and it's structured so it can scale up to $100 million.
Huge. And we see the exact same aggressive scaling over in Texas.
Yeah.
The TXDOT issued an 8-figure blanket purchase order.
Right.
This isn't just for one city like Austin or Dallas. It allows for the statewide adoption of the Rekor Command platform across all of TXDOT's districts. We are talking about covering 80,000 miles of highway.
It's mind-blowing scale. But honestly, the most fascinating deployment to me is in South Carolina, where they are rolling out these things called virtual way stations.
Yeah, this is a brilliant application of their AI. Normally, commercial trucks have to physically pull off the highway, wait in a long line, and stop on a mechanical scale to ensure they aren't overweight.
We've all seen those way stations on the side of the interstate.
Right, but Rekor's AI systems can now detect overweight commercial trucks while they are driving at full highway speeds, which completely eliminates the need for physical stops.
And let's explain why South Carolina is so willing to pay for this. An overweight 18-wheeler does exponentially more damage to the asphalt than a normal passenger car.
It's not even close.
No. One severely overweight truck can do the road wear equivalent of thousands of sedans. If the state can't catch them, the concrete gets shredded, and the state has to spend tens of millions of dollars repaving the highway years ahead of schedule.
Exactly.
So by catching them dynamically at highway speeds, Rekor's AI is literally saving the state's infrastructure budget.
And these massive statewide wins, Georgia, Texas, South Carolina, these are exactly what is driving that 80% surge in the backlog. They have proven that their concrete-to-cloud strategy, where they handle everything from the physical sensor installation all the way to the software dashboard, is actively displacing the legacy vendors.
Okay, so this is the moment where the paradox we mentioned at the very start comes crashing back in.
Here we go.
Right. The tech is patented, the margins are hitting 56%, they're winning $50 to $100 million state contracts. So why is the stock incredibly volatile, and why is the market deeply, deeply skeptical?
Because the balance sheet is telling a brutal story that technology just cannot immediately fix. We have to address the going concern warning.
Yeah, we can't ignore it.
In their annual report, management stated very clearly that their cash balance, which was roughly $16.5 million at the end of 2025, is insufficient to fund operations for the next 12 months without raising additional capital.
It is so jarring to read that in the same report. How on earth can a company with a $26 million backlog and a potential $100 million contract in Georgia formally warn the market that they might run out of money?
This raises an important question, and to answer it, you really have to understand the agonizing reality of government procurement. We call this the liquidity gap.
The liquidity gap. It's kind of like winning a bid to build a massive skyscraper.
Yeah.
The city signs a contract saying they will pay you hundreds of millions of dollars over the next 10 years to manage the building. That is fantastic news for your backlog.
Sure is.
But the city doesn't hand you a briefcase full of cash on day one. You have to buy all the structural steel, pour thousands of tons of concrete, and pay the construction workers out of your own pocket today just to get the building off the ground.
That is exactly what Rekor is facing. They have to fund the manufacturing of the edge sensors, the engineering work, and the physical deployment up front. They absorb all of the heavy expenses today, but the high-margin recurring software revenue trickles in very slowly over the next 8 years.
Right.
Furthermore, management admitted on the calls that getting state agencies to move quickly is a, quote, very slow grind.
Government speed.
Exactly. You might have a blanket purchase order for all of Texas, but activating each individual district takes bureaucratic time.
So they have guaranteed future wealth, but they are practically starving for cash today, which leads to the mechanism they are using to survive, shareholder dilution.
Yeah, to bridge this liquidity gap, Rekor has heavily relied on selling equity. In 2025 alone, their outstanding common shares ballooned from 104.5 million to 136.4 million.
That is a lot of new shares.
It is. They executed a $15 million direct offering in December 2025, and they heavily utilized at-the-market, or ATM, offerings.
Let's explain how an ATM offering actually works for the listener, because it's a bit different from a traditional stock sale.
It is.
Instead of selling a massive block of millions of shares all at once to an investment bank, which would immediately crash the stock price, an ATM acts like a slow drip.
A very slow drip.
The company quietly trickles new shares into the open market every single day. It keeps the lights on, it funds the deployments, but for you, the retail investor, your slice of the company's pie gets a tiny bit smaller every single morning.
And that brutal dilution actively suppresses the stock price, which creates immense frustration in the broader market.
Which brings us to the final strategic outlook. When you synthesize all this granular data, the verdict for Rekor heading deep into 2026 is officially rated as high H risk, but sitting at a massive inflection point.
That's the perfect way to categorize it.
The visibility into the second half of 2026 is incredibly strong. I mean, they have right-sized the organization by closing the Tel Aviv office. They project R&D spending to normalize down to a very disciplined 7 to 10% of total revenue.
Right, the bleeding is slowing down.
The sales ramp is aggressive and the backlog is swelling. But you just cannot ignore the high-risk element. To bridge the gap until that government cash truly starts flowing, investors face the very real likelihood of near-term dilution.
It is the ultimate tension of a growth company maturing into an enterprise player. The patented technology clearly works. The Doherty's business model is actively winning against legacy competitors.
Right.
The only question left is whether they can navigate this financial tightrope to reach sustained profitability without diluting the current shareholders to the point of absolute exhaustion.
So for you listening, as you build your own investment roadmap, it really comes down to weighing that multi-year locked-in revenue visibility against a fragile balance sheet that practically guarantees growing pains in the near term.
Exactly.
But before we wrap up, I want to leave you with one deeply provocative thread that was just kind of buried in these 2025 sources.
Oh, the Rekor Lab spin-out.
Yes. Amidst all of this traffic and highway data, Rekor quietly launched a new subsidiary called Rekor Labs. They even had Professor Sanjay Sarma step down from the parent company's board of directors specifically to chair it.
Right?
But Rekor Labs isn't looking at highways at all. It was launched to commercialize patent-pending technology to detect deep fakes and synthetic media.
Which is wild. They're taking their deep proprietary expertise in visual AI and computer vision and applying it to an entirely different, incredibly urgent sector.
It really makes you wonder, what if the ultimate long-term value of Rekor isn't in analyzing traffic at all?
Yeah.
What if their true potential lies in using their visual AI architecture to verify reality itself in a world that is rapidly being overrun by synthetic media? It is definitely something to mull over.
A fascinating possibility to watch unfold over the next few years.
Risk defined, portfolio protected.